Now let's move on to the more fun part of this week's newsletter, though, the regular portfolio segment where I talk to you, the viewers of this channel who have reached out and wanted to have a chat with me for some reason. Not experts, not advisors, no newsletter writers, nothing like that. Just regular folks like you and me sharing their portfolios, talking about it. Then if you want to sit down with me and have a talk about your portfolio, my portfolio, please send me an email at antonio@resourcetalks.com and we're going to make it happen. And while you're doing that, let's play that clip on here. All right, Nick Jones, I've seen a lot of your stuff on Twitter, so I kind of know who you are, but let's maybe sort of bring it back to the basics and tell me, who are you and what do you do?
Yeah, absolutely. First and foremost, I'm a dad with a 2-year-old and one on the way. That's probably the most important thing I do, but probably not talking with you here today to discuss my fatherhood or anything like that. So, but no, day job, I trade agricultural commodities as my 9 to 5. Primarily, I trade container export to Southeast Asia. But also do some domestic business as well.
Do you do that for a corporation, or are you working on your own?
Yeah, so I've been I do work for what I would call a medium-sized company located in downtown Minneapolis, Minnesota, called U.S. Commodities. I have worked in and around agricultural commodities since I was a junior in college. I started working on the floor of a small exchange we have in town, the Minneapolis Grain Exchange. It doesn't operate anymore, but they traded spring wheat futures and options there. So my last 2 years of college, I worked there during the day, took my classes late afternoon and evening. And then eventually, so I started out as an employee of the exchange, and then eventually leased a membership and spec traded for myself for a couple of years. That went really great, and then it didn't. So I absolutely blew up that account thinking I was a lot smarter than I was. But learned a ton of valuable insights. And actually, it was the guys that were on the floor who had longevity. So obviously it's a high turnover place. You got guys coming and going, but the traders who were on the floor and had been there for a long time came from a cash market background. Cash market meaning they traded the physical commodities before trading kind of the paper markets. So used that network and got myself a job learning the cash market grain business. Went and worked for a couple of small grain elevators, and one in very rural central part of the country, and then another one out in kind of the Intermountain West in Utah. Did that for a couple of years before coming back home to Minnesota and getting my current job, which I've been at for almost 9 years, and managing P&L for just finishing up my 5th year of doing that.
What do you like? What do you have to be good at your job? I guess, is it fundamental analysis? Is it speed of execution? I don't know.
No, that's a really good question. And in our business, we see a lot of people from different backgrounds. You know, if there's one kind of trait, I guess, it's ability to manage the risk and make decisions around large dollar sums without that risk weighing too much on you. Obviously, it's going to affect you to some extent. But really, you know, the math of it's not complicated. So yeah, it's ability to manage some risk, I would say. Interpersonal skills are really important. It's definitely a relationship-driven business. You know, price dictates a lot at the end of the day, but the relationships we have with counterparties are, you know, without people to buy from and sell to. Doesn't matter how good you are at your job, you need to be able to get your hands on product and trade it. So some combination of those two. But yeah, it's an interesting business because, yeah, it's not like it's a bunch of finance guys. It's a bunch of it's a bunch of you know, economists or whatever, math guys, any of that. You know, you see all sorts of different backgrounds. I guess if there was one other trait I would add, it's kind of an entrepreneurial spirit. I mean, you know, I've got guys, you know, fighting to take my market share every day, and so you kind of have to go out there and want to build something, want to protect it, yeah, that's as best as I can describe the traits that make a good cash market trader.
Okay, no, that makes sense. Are you able to use some of the knowledge that you're gaining at your job to your sort of personal advantage? I mean, I don't mean like insider information or whatever, but just the experience and the knowledge. Can you use that for your own personal trading and investing?
Yeah, if you asked me maybe a few years ago, I would have said no. So in my day job, I'm not really betting on price direction very often. I am more making a market and capturing a bid-ask spread and doing that as many times as I can. And then when you get a position on, then you can arbitrage the direction of your execution, arbitrage around your freight spreads. So I'm not really taking a macro view, and I almost intentionally try not to have a macro view around agricultural markets because I don't want it to influence what I do and where my edge is. But with all that said, I do think that my day job, I know that my day job has absolutely some of those skills are helpful in understanding a market's fundamentals. You know, a really, you know, probably the most obvious one for me would be kind of the summer of 21 and looking at LNG spreads between the US and Asia and Europe, those kind of three markets, and seeing that market move past the cost of freight plus margin told me that something was wrong. Long before really it was people were talking about energy crisis in Europe. And then I was able to make some good money on kind of that view. So yeah, I definitely understanding, you know, the price of something, you know, what we would say is FOB, FOB, the price of something FOB, which is just the price of the commodity at an origin before it's been shipped and taken to a destination market. Understanding kind of the difference between a FOB price, a delivered price, cost of freight in the middle, and what that can tell us about a market and what's going on there. Yeah, that's something that's very much from my day job. And even, you know, we've all heard about the issues with container exports over the last couple of years, container execution, and those logistics and supply chain issues. So you have a market that's like, you know, say Vietnam, which they import a lot of input feed commodities for their aquaculture and feed businesses, and have come to rely on a certain amount of imports. Well, when the container business really slowed, the ability, I should say, to move containers down supply chain really slowed because of port congestion and, you know, a number of the other things we've seen. You know, just like those LNG spreads opened up and that arbitrage didn't close, still hasn't closed, was wide open. And I really saw a similar thing in my business, where it was, you know, typically you'll see an arbitrage into an export market open up, and then guys like me come in there and we're absolutely slamming the bids in those markets until the math doesn't make any sense anymore. So we're gonna bring down that price. And because of the issues with logistics, that arbitrage it didn't close for 2 years, and it's just now starting to come in a little bit. So yeah, I definitely think that you know, some of the knowledge base from my day job helps me and has helped me make some money in trading.
Where is that knowledge base brought you right now? Like, what does your portfolio look like today?
Well, I'm not sure if it's as applicable today as it has been some of my past trades, but my portfolio today is about 65% uranium. And then I might be a couple of days old, but I see here. Yeah, it's about 65% uranium. I've been building just in the last week or so a position across a number of different industrial metals that I think are interesting. That's about 8%. And then I have some oil positions on all on the back end of the curve through futures options. That's about 5% of my market or portfolio today. And then the rest is a small and growing portion. I call it my boomer portfolio, which is just higher yielding dividend type cash flow stuff that hopefully will eventually be most of my portfolio, which is, and that portfolio today is about 80% British American Tobacco, BTI, which I think is a compelling position. So that's about the breakdown, but really it's, yeah, I kind of think of it as three components. I have my uranium position, which has ranged between really 60 and 80% of my total invested net worth. Then I have this high yield portion. And then I have, kind of this other portion, which truly I'm a little bit more active with. And I use that really to avoid making mistakes in my uranium holdings. I have some tendencies that probably make me not a great investor. I'm emotional, prone to knee-jerk reactions, and feel the need to be doing something, which is rarely a recipe for making money. So I've kind of have a smaller portion of my investments focused on that, and that's to avoid making mistakes in my larger holdings.
I definitely feel you in that, because I sort of have the same thing, and I think for me it might be a money thing. I imagine that my portfolio is specifically commodities, 100% in commodities right now, outside of my private equity holdings in my cafe and a couple of other things. Long story. I imagine my portfolio growing through my growth portion, which is the commodity part right now, and then moving more and more into dividends, dividend paying equities that I would manage less and less. And I imagine that, with age and with the growth of capital, I would feel the urge to do something less and less, and feel the urge to be like, I would take these days off where I would go hiking or something with my wife, and I would not feel okay for not checking the news. Maybe not checking my portfolio every 5 minutes, but just checking the news, checking the chatter on Twitter. Even though I realize it's 99% noise, I still feel the need to do that. So I definitely feel you there.
Yeah, I mean, I think, and that is, yeah, that is my goal. Is I'm taking a shot now, right? I'm 36, and if something goes wrong, it's nothing I can't recover from. But I'm taking a big concentrated bet now, and that requires more attention. And it's in higher risk type stuff, and the goal is to, over time, to take on less risk and require less attention and less moves. If I have to trade, the dream is to trade once a quarter or something, like a rebalance or whatever it may be, but and then be able to enjoy my kids and pursue whatever endeavor is exciting and interesting to me at the time. So I feel that very strongly.
Yeah, absolutely agree with you there. If I have an interesting question, I call it a hypothetical question, the gun to your head scenario that I ask sort of towards the end of the conversation, which goes something like, if there was a gun to your head right now, and the person said, hey, you got to sell everything that you have, real estate, everything that you have in terms of an investment portfolio, and with that money you have to buy only 3 stocks, which stocks would you buy and why?
It's a wild question. I guess, putting me on the spot, it's SPUT, Cameco, and Global Atomic. Those would be the 3 names. If I had to go 100% in, I think that's the closest I could get to having some of the risk on I would want, but being able to maybe sleep at night. Although if I had 100% of my net worth in just those three equities, I don't know if it would be exactly. If I were to pick three, that would be the trade today.
So all uranium, you're not thinking about shipping or anything else?
With where we're at, I strongly believe with high conviction that we're, I don't know if it's next week, next quarter, 6 months, 12 months, but I think that we are quite close, and that's where I would be taking my shot today.
What kind of returns do you think we might, like, let's not put it that way. What kind of returns would you realistically like to get from that portfolio if it were only three stocks?
That's another tough question. If I could, with something like that, if I could double my money, that would be great. I think there's more on the table, but if it was a double or a triple, I'm definitely pulling money off the table and going back into cash along the way. Not the question you're asking, but for me, I have traded this uranium cycle very aggressively early, so I don't have to trade it as aggressively later. So my guess is I'll be pulling money off the table sooner than a lot of our, maybe mutual friends might be on Twitter and otherwise. But yeah, I think that something like that with that kind of balance, a double or triple would be a home run.
Yeah, I agree with that. Double or triple seems very attainable to me. Obviously, I would like more. I'm into cars, and sometimes I would talk to friends about cars and talk about what's your favorite car. We all have like a favorite Pagani or something along those lines, and then we talk about what's your favorite like attainable car, and then you drop to like a Mercedes AMG or something along those lines, something that might be possible if you're 50, you've done well in life. Something like that. So the 2 to 3 would be sort of my attainable, like a Mercedes, and then we can always hope for a 5 or a 10x on some of the Explorers that I've gone irresponsible on. But that's a good answer. What do you, if you sort of had to close it off and everything that you've achieved for yourself so far? If you had to go back to your 20-year-old self and give them one advice to do the same or do better, what advice would you give to yourself?
My 20-year-old self had a lot of growing to do in front of him. So, I would think be patient. If I were to give my 20-year-old self some advice, be patient. There's always another opportunity. So the fear of missing a certain trade or thing here and now, it just doesn't matter. If you're working hard and searching and doing research, there's always another good opportunity out there. So if I were to give myself any piece of advice, is there's always another trade.